We are with Wkhs Workhorse Group Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Workhorse has actually been in a slight downward trend. Obviously, there's been a lot of volatility, ups and downs. It reached highs of almost $30 and some change, reaching almost the highs of $31 that I had stated that needed to be broken through. And since that point, at the $30 and some change point, it started to become a rejection. So $30 and some change, anywhere from $30.40 to $30.60, is a very important number to be broken through until this actually starts to hit newer highs, and then they need to break through $31. But now we're down here. It has been in bearish territory for some time, and it slightly broke through the 50-day moving average, and quickly after, the bears have actually been dominating this, bringing it back down. So there's some important things that have happened here, and we're going to see our new resistance and support levels as they've changed. And we're going to talk about this narrow, and then we're going to talk about it a little bit broader so that we have some points of reference to keep in mind. So our resistance and support has changed just a bit, and our also 50-day moving average has ended up above the stock price where it's at right now. It's currently at 22.26, and one of the most important things here is the fact that the 50-day moving average is above it. 50-day moving average is 22.55. Super important number to keep in mind. As long as we're below it, the bears are in control. The moment we're above it, the bulls are in control. So the bulls are going to want to break through the 50-day moving average. But before they even get there, they're currently right now below that area. And there's two ways this can go. I mean, if the bulls do start to work their way up, they need to break through the first resistance level after breaking through the 50-day moving average. And then their next goal is up here, which I want to talk about, the highest point before the fall. And that's 23.34. I'd write that down for the near future and days to come. And if this goes in bearish direction, then the lowest point reached right now in the day was 21.79, and if that gets broken through, this could be on its way to newer lows. But before getting to any of those numbers, let's look at what's important for tomorrow as we zoom in. So let's go ahead and get these resistance levels and supports to the right location. Resistance is fine. So again, 22.55 is our 50-day moving average. We're below it. And if the bears break through support, which is 21.90, this is a very important number, 21.90. If that gets broken through, I want to emphasize to all investors, pay very close attention to how quickly this is hitting newer lows. How quickly did it start moving to get to 21.90 and break through it? What's the inflow, the outflow, your 1 minute, 5 minute, 15-minute charts? Check those time frames to see what is going on and who is dominating. But if 21.90 gets broken through, this could be on its way down to newer lows and newer support levels by moving further away from the 50-day moving average, and also confirming that the bears are gaining control because we're already in bearish territory. The bulls can reappear. We're not that far from the 50-day moving average, but breaking through 21.90 is going to make it much difficult for the bulls to reappear and start gaining control and leverage by breaking through the 50-day moving average. So that's why I emphasize pay very close attention to how this stock reacts and how it's acting if it breaks through 21.90. Now, on the other hand, we have our resistance. The bulls want to break through resistance. This is the first resistance level in bullish territory, and before breaking through 22.71, obviously the bulls need to break through 22.55. So if they are able to break through 22.71 and turn it into a support, the bulls have accomplished two things. They broke through the 50-day moving average, working their way up closer to the resistance level and in bullish territory now. And 22.71 will confirm if they can turn it into a support and pull away from it and confirm it and test it and start to work their way up to newer highs, that they are gaining leverage and gaining control by maintaining themselves in bullish territory. So the bulls, yes, they need to break through 22.55 to get back into bullish territory, but they need to break through the first resistance level, 22.71, turn it into support so they can break away from the 50-day moving average in an upward direction. So the tug of war is going to be interesting. It's been pretty interesting the last couple hours of the day with the slight up and the slight down. We're going to see how this plays out tomorrow. And again, the bulls need to break through 2271, and the bears are trying their best to pull this down to 2190. And I want to emphasize to all investors, pay close attention to how this is acting if it breaks through 2190, and how quickly is it trying to hit newer lows and newer support levels. So we'll see how this plays out tomorrow. If you feel encouraged or inclined to subscribe, you're more than welcome to. Please do so if you feel encouraged. But don't forget to click on the bell. Click on the bell so that you don't miss a single video that I post by turning on all notifications. And also share this with your friends and community. Don't forget to hit the like button to let me know you watched this video. And thank you guys so much for watching. And let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up, also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy Like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you are going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.